Hello, everyone. Thanks for tuning in. I'm going to go through the market here and see what to look at. Some pretty interesting shifts going on, I think. Obviously, the last month or two, it's been all about technology. But I think that we're kind of moving over now to where it's going to be more important to watch the financials and the healthcare stocks. If we look at the S&P 500 here. This is the SPY, the S&P 500 ETF. This is the fact sheet, and it shows the holdings, and these are the sectors. So tech is the biggest sector. Financials is second biggest. Healthcare is third. Different sectors are kind of in the driver's seat at different times. These small guys, materials, utilities, real estate, they're all less than 2.5%. So they don't really affect the broader markets. But we look at them for trading ideas. Energy, even though it's really small, it can affect the broader market. Consumer staples is small too, but sometimes you can see kind of a flight to safety thing going on in consumer staples. In other words, sometimes before the broader markets sell off, you can see money flowing into consumer staples. So we keep an eye on that too. I mean, we keep an eye on all of them. This is a good way to get trading ideas. So here's our S&P, pretty quiet, not surprising. Big move up, a little bit of consolidation. Testing this uptrend though that started back in November. So that's something to keep an eye on. And there's a good chance there's going to be some short-term support around this 517 level. And that's because if you'll notice, it was resistance. And markets are in financial markets, levels that were resistance can become support. And that happens because we have seller's remorse. There are people who sell and then the price goes higher, and a lot of them say, I made a mistake. If I can, I'm going to buy my shares back, but only if I can get them at the same price I sold them at. So there's tends to be support at former resistance levels. And I mean, you can see that in a lot of cases. You can see it here. You can see it down here. Now we're going to go look at our sectors. Remember, different sectors are in the driver's seat at different times. Now, this is why I'm saying it's probably not as important now to watch tech in terms of what's going to go on in the broader market. It's right in the middle of a trading range here. And despite all the hoopla, it hasn't really moved. I mean, in the past, we're exactly at the same level that we were at a month ago. Now, this is what I think is important is let's go look at the financial sector. So if you really want to get an insight into what the broader market's going to do, I would be really keeping a close eye on this. If this starts to really accelerate to the downside, that's going to pull SPY down, and that's going to pull the broader markets down. Now, as you can see, we've run into resistance up around this 4170 level. Now, this isn't a coincidence that there's resistance there. It was the peak way back in January of 22. Well, not way back. I mean, it's only 2 years ago. There tends to be resistance at former peaks, and that's because there's people who bought back here who become remorseful when the price goes lower, and they tell themselves, I made a mistake. If I could if I could sell my shares and get out at break even, I'm going to. So I know it seems like a long time, but we see this in charts all the time. It's called market memory. There are charts where there are support levels and resistance levels that are intact for years. Just I know it's a little bit off subject, but I'll just show you on Intel something that's kind of fascinating along those lines here. So way back here, look at how clear this support level was for Intel, around 43.5 or maybe 43.60. Was support in December of 17, all the way through February of 22nd. Every time we got down there, it was support. Support's this large group of buyers, and a lot of times when we get to support, we tend to rally because some of the buyers start to sense there are other buyers coming into the market, and they start to get nervous they're going to miss out because the sellers are going to go to whoever is willing to pay the highest price. So then the buyers start to outbid each other, and you can get this bidding war. And that drives the price higher. And then recently, when Intel blew up on, I believe it was earnings back in January, stock falls, and where does it find support? At the same level that was support 7 years ago, where it first became important 7 years ago. So that's our market memory. So just to go back to the financials. So it's an amazing phenomena. I mean, I've been looking at markets now for, 30 years, and it still kind of amazes me. But the charts don't lie, and you can see it. This chart also shows how support can turn into resistance. See how support down there became resistance here? Well, it's also because of remorse. Remember, these charts are all psychology. Don't think about the security. Think about the people that are trading it. We get here and people buy. They think it's easy. The market goes up and then it goes all the way down. And a lot of them say I made a mistake. If I can get out at break even, I'm going to. So when the price gets back to their buying price, remorseful buyers placing sell orders can turn what was support into resistance. Here we can see what was resistance turned into support. And that's remorseful sellers. People sell, the price goes higher. They say, man, I made a mistake. If it gets back to my level, I'm going to buy my shares back. So just like remorseful buyers placing sell orders can convert support into resistance, remorseful sellers placing buy orders can confirm resistance into support. Remorseful buyers place sell orders, remorseful sell orders place buy orders. And then you can see, once again, it turns into resistance again, and it turns into support again. So a fundamental rule of trading that you need to understand if you're going to be successful is that some price levels are more important than others. And it's really just that simple. Sometimes we know why, but a lot of times we don't. Meaning why the level is important. Next thing to watch here is our healthcare sector. So testing the support here, okay? Support's this large group of buyers. Now, if we break it, meaning we go below it, it tells us something about the psychology. It tells us that the people that were buying, the people that created the support with their buy orders, they're out of the market. So anytime you take demand or buyers out of a market, it could set the stage for a move lower, because if sellers come into the market, they're going to have a hard time finding buyers, and they're going to be forced to push the price down if they want to find buyers. So a lot of times when you break support, you tend to make quick moves lower. So that's something to keep an eye on there too. Then we'll just kind of go through the rest of these, which aren't really speaking as loudly as those guys are. But here's our consumer discretionary, kind of just chilling right around this 180, 150 level. Next up would be communication services. And consolidating after a move. We see like these guys, there's really, markets make moves when they get overbought or oversold or too important support or resistance. Something's kind of just moving along sideways. It's not really going to, unless some kind of news comes along, it's probably not going to make much of a move. We like things that are at support or resistance or are overbought or oversold. Here's our industrials, had a decent move up. Now we're just having a little bit of consolidation here. Our consumer staples, see, we ran into resistance at a former peak, just like we saw before. Resistance, resistance, resistance becomes support. But here we're hitting resistance right around here. So we're just going to have to watch this over the next couple of days, because it's either going to roll over or break out. They tend not to stay at these important levels for too long. You can see the same thing with energy. I should really adjust my line here, but I'll go up there. Yeah, so now we're at this former resistance level. So a lot of this is going to be oil. And oil is breaking out. Well, it has broken out. But this shows you another example. See, here we are in the oil market. And notice how support becomes resistance, just like we saw before. Well, because don't think about the oil. Don't think about the ETF. Think about the people that are trading them. And oil traders, just like stock traders, feel remorse. So people buy, the price goes lower, and they say, oh, I made a mistake. If it ever gets back to my level, I'm going to get out at break even. So remorseful buyers placing sell orders can turn the support into resistance. But we've broken out. There's a lot of inflationary stuff going on. All this talk about interest rates coming down, I mean, I don't see it. Since the middle of December, oil is up about 20%. And that's the biggest driver of inflation, that and government spending. And neither one of them is going anywhere, it looks like. Okay, everybody, let's just wrap it up a little here. We'll just look at these three little sectors. See the real estate sector, see the same thing, resistance turns into support. Levels, trends, and momentum. Forget all this other hocus pocus stuff, all right? Gann theory, Elliott wave, Fibonacci. It's not real. I spent 25 years in the institutional trading world, and I never saw anyone use that stuff. What do we pay attention to? What are the important price levels? See how resistance turned into support, support turned into resistance, resistance turned into support. You can see it down here. If you know where the levels are, it's like having a map to the market. Okay, you see real estate. Oops, sorry. I meant to bring up basic materials. And this is kind of breaking its uptrend here too. All right, everyone. So just remember, if there's a takeaway, let's watch the financials and the healthcare. And actually, before I go, I just like to look at this bond ETF. We're a bit of ways from it, but if this thing ends up breaking the support around 90, that's could be negative catalyst for the market because it's going to push interest rates higher. All right. Thank you, everyone. I will see you soon.